The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and I was mentioning just now when I did the update that Caterpillar and Home Depot, look at this, Caterpillar is down 3.96, was down much more earlier. It was down at 135.27, now at 137.42. Just yesterday, it made a new recovery high at 143 something, 142.55. Earnings, it's kind of being impacted. And Home Depot took a dive. It's down 2.01%, minus 3.82 at 186. And just yesterday made a leg E at 193.42 in the Chapman wave. Leg B in the weekly chart. All-time high of 215. Most recent low back in December of 158.09. All I can say is that a very nice retracement, but it seems to me the 200-period moving average of 183 is kind of where you bumped into resistance and you went above, retested it, went a little bit higher. Now you're back testing this 183 area. Got to watch it closely. And it's going to be quite a bit of a tell because the HGYX, which is the HYG, I can't remember now, has it got a dot? HYG dot X? Oh, I should know this. HGX, that's what we're looking at. Is making a leg D, possibly a peak D today in the daily chart. What do I mean by all that? I should have checked to see if I've got my notation up here for my Chapman wave. Ooh, I don't. I'll do that during the break. I'll find one. All right. We're always looking for the fourth highest peak. That's where other things can happen. Yeah, we are in leg D, possibly a peak D in the daily chart after a Chapman wave instant restart, alternate count E/A, F/B, G/C, and that very often goes to the D, went to the D, and now the MACD, the moving average convergence divergence, is just turning negative today. Stochastic still strong at 86%, and this is something I want to talk about. You see this trend line support. If you see it in the Dow, this trend line support is really very important because the longer that it stays in this channel, with very small candles, is making nominal new highs, nominal higher lows, nominal new highs, just keeps doing that over and over, and it's done that not since December the 26th, the low, but from this low right here, 3rd of January, when it had that big red candle, and it went to 22,638. From that moment, we've got a trend line support, we've got a resistance that just is impeccable in terms of repelling the price, just amazing how that works. And now we're looking at something very clear, that my experience with this very long up channel, I call it the worm. It looks like a little worm climbing a tree branch. In fact, the tree branch here is the 14-period exponential moving average and the 9-period, the green and the black lines. As long as it keeps holding that, that's fantastic. When it breaks below it, and the first one will be 25,000, now it's changed. So today it is 25,845 on the 9-period moving average, but it's really the black one. A close below this black one, the 14-period moving average, 25,669. That'll be the first time that we're seeing since we broke above, since that January the 3rd low. That'll be the first time that we not only go below that 14-period moving average, that we close below it. So that's going to be very important. I think we're getting closer and closer because you can see the MACD is getting narrower and narrower as the histogram gets smaller and smaller, the distance between the 9 and the 26. And in this case, 92% is still good. And that's what I say to subscribers. We've got to tighten the stop on those shorts. So we got out of the shorts. I'm not prepared to sit there and say, let's expand, because whenever you raise a buy stop or a stop, you change it from your initial concept of what should be the stop invariably what happens, it just takes you out at the new expanded price for a bigger loss. I don't need that. I don't mind coming in twice. Usually the third time works for short positions or long positions if we really determine. So what we're looking at here is a situation where the Dow is giving you very clear parameters. If it closes above that 26,277 resistance from the left side, that goes all the way back to November the 8th, I believe. Let me just double check. Whoops, stop right there. November the 8th of last year, 26,277. That was the big turnaround in the market, so that it accelerated down and then it bounced. And that December the 3rd was where we saw that little tiny second doji candle reversal. We went all the way down to 21,712. So this is what I needed to say. Within the context of the markets, this particular pattern with the V-shaped pattern in the weekly chart is suggesting to me we are really close to some kind of a pullback. It sounds like, oh, that should be easy to say. You're only up 10 weeks since the low. No, I'm looking at it now based on the daily chart. But that weekly chart is extremely strong with the MACD still expanding and the stochastic at 89%. To me, those are really important features. Okay, so now what I'm going to say to you is that within the context of the short side, I think it's incumbent upon anyone to be considering where you actually got in, if you're long, what you're going to be doing, or if you have no position but you now want to implement a short on one of the indices. I would say that we're getting closer and closer to where you could start a short. If you wanted, you could start just the smallest position now, but then I wouldn't be on a 3-time short. I just go 1-to-1, DOG for Dow, SH for the S&P, whatever you want. But don't get aggressive yet. Get aggressive when the trend has confirmed the change, and now you're down below the 14-period moving averages, and then there's a little bit of a bounce to make that H pattern, and then the next pullback should be very sharp. So just be careful. Now, that answers, in a way, a question I got from Sean. Sean says, 100% invested, 401k since December the 26th. Would it be a good time to lighten up? So this is what I'm going to do. Taking a drink of water. Okay. Lubricated the vocals. And now what I want to say is, congratulations, Sean. I think I'm going to give you some parameters, but because you got in so perfectly, you couldn't have gotten even, I mean, that was the perfect entry point. That's where we had actually bought the 3 times long Dow a couple of times. It made a little bit, and then we got out of it. We got stopped out of it, and it was very hard to keep getting back in. Every time I wanted to get back in, it's the same story. So I congratulate you in just doing the one investment. You're in the 401k. But now I'm going to say to you is, I want to go through a couple of things. I want to talk about news. I want to talk about the media. I want to talk about the parameters we're looking at and why I want to talk about it right now, because I think this is a really important moment. So I'll be back, and Sean, I will answer your question. I got a feeling I'm going to tell you to answer your own question because you did such a great job of the entry, but I'll give you parameters to look for. I'll be right back. Basil Chapman, Dow's down 13, S&P is up 0.85. I'll be right back after these important messages.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Dow's down 7, S&P's now up 1. Okay, so I thought I was taking too much time, but it wasn't that. Sean just sent in. I needed to decide before noon. Well, my show starts at noon, so that I'm sorry you didn't say that before. I would have emailed you, and I would have told you to do exactly what you've just done, and that is to go with your gut instinct and what you did. Why would I say that? Because I can give you parameters to get out, but you got in beautifully. I wouldn't want to touch that core position. I don't think that's going to. I think that's going to be a surprise to you in the length of time that it takes before you actually take a lot off. So I was going to say to you two things. One is you could wait for a 300-point pullback to say if that starts to fail to get back over 26,000 in the Dow over a couple of maybe 2-3 sessions going into Friday or even Monday, then I would take something off. But if you had to ask me on a position like that, I would only take a little bit off right now. I'd let the market tell me the rest. You're only 600 points, so it was saying 900 points away. Let's call it 1,000 points away from an all-time high. So that's good. If we get into the 26,400s, it's like a magnet. It's just going to attract the price sooner rather than later. My thinking is we'll get to a new all-time high this year, but my original thinking was that it would come from a pretty big pullback in the late February, March period. Now, what are we? We're February the 26th, so we're getting into that period. And so you've done it. So congratulations. Been listening. Thanks. Needed to decide before noon. I lightened up. That's exactly what that couldn't have asked for anything more perfect. You did it. It was your decision. I prefer that because you're the one that got in. This is different to saying we're right here at 26,087 in the Dow. We're at 2797 in the S&P. What should I do? Then I could give you something very different. Okay, now let's go through this. Within the context of where we are, and it's this channel. Look, I'm going to go through all of them. Right here, the Dow, the S&P, another channel. So it's got this resistance, a little different to the Dow resistance, but it is a resistance nevertheless. It went to the target on the upside, left side 2,800, went above it, it went to 28 13.49 yesterday. Let me just type that in so I don't have to do that all the time. 28.13.49, is that what I said? Something like that. And you're just a little bit lower, 27.97 right now. So I'm saying this is where I'm going to expect some kind of a rounding top, some choppiness. The MACD is still pretty good, but it's starting to get closer and closer to turning negative. Turning negative is not the issue. Turning negative with a wide distance, the theta, I think it's called, between the 9 period, the green faster moving average, and the red slower moving average of 26. That's what you want to see for an acceleration down. If it's just flat, it says, hey, you know what? 2,700 in the S&P, 1,000 points down, 1,200 points down in the Dow, and then we start forming a base again. So this is very important. So you've got very clear, 20, I said that before, I'm going to do it again, right here. That the 14 period at 27.60, that's going to be important. The close below 27.57 says, all right, now we've started the consolidation. Same thing with the Qs. I'll give parameters here. The beautiful, look at this narrow move to the upside. The close below 100 and it says 71. I'm going to say below 170.30 over the next 4 or 5 days. And that's a real problem. Pushing higher is just the way that this pattern is. It can do that. Not as long as the technicals, 87% in the stochastic, and the IWM, I think I just did, but I'll do it again. Look at that beautiful up channel. It's right at the resistance level. It's at 157.50. A break into the, I said the break into the 155s the other day would be very positive. We went to 156.24. And the MACD is still pretty good, and stochastic's turning down, but it's at 92%. On balance volume, blue line is just turning down. This is a key moment. Now, I'm going to take just a moment to talk about something. We haven't got the bad news that filters into the market like you had, especially going to the end of December. And what I mean by bad news, it isn't somebody says something. It's this constant repetition in every medium, everywhere. Even your local news has a headline talking about something that's bad. We haven't had that. Now, what do I also mean by bad news? I mean the media controls almost everything that we look at, and they decide what we should be looking at many times. So that's going to be important, and they're looking for anything that's bad because, you know, this is the summit, and they're going to be saying, oh, what's not going to work? And yet it isn't doing anything negative to the Dow. It should have already, we should already have been turning down under other normal circumstances. This is kind of abnormal. That low that was made in December might be more than just a cyclical low. It could be a more sustainable low. So I'm looking at this and I'm saying, okay, buying keeps coming in. The positions that we have in my opening call, perhaps one more position than I would like at this point, because I like to only have 6 or 7, because that's what I can control for my newsletter. It takes a lot of time to do all the work. Things are holding up very well. Some of them are very nice. I mean, we've even got a particular position that is up about 9%. We've got a couple of positions that we've just started. They're down a little bit, but one was just a pure experiment and in an area we've never been in before. And the other one was an area I've followed for years. We've got a position. We might start a second position. It's also in an area that's always late to the party, either going down or going up. So far, I can't complain about that. But what I want to say is, you know, I spoke about this a long time ago. I said, in the context of what I look at in the media, and I'm only looking at the media as to, remember, if anyone looked at the Oscars the other night, what did you see? What did I speak about 5 years ago, 4 years ago, 3 years ago? That fashion would change to the point where we would start to go into the Mozart period. You know, any picture of Mozart or one of the early, the founders of America, you go back, and they were wearing these, for big events, they were wearing these fancy things with cuffs, and the hairstyles of the men were just fancy stuff that must have taken hours to prepare. And I said, we're going back into that era. I don't know why or what or where, but that's what I'm looking at. Well, you saw some of that on Monday, Sunday night, whenever it was. Now, media, I remember I also said that just my observations, not even a political, just an observation, is that Republicans resign and Democrats stay. I don't know why. I think the media has a lot to do with it. So I had said recently that the whole thing down with the 3 Democrats in Virginia, is if they can hold off just for a couple of days to get off the news, they'll stay. They'll just stay. But if it was a Republican, 24 hours a day, 7 days a week, every minute of every day. And that's the way the media seems to work. This is, once again, not political, it's just an observation. You make of it what you will. And that's the news that we need to see. For this market to start going down and then stay down decisively, you would have to have bad news, and that bad news would have to filter into the news media until it is like almost every day we're looking for this bad news. So far, we haven't had that. I needed to mention that. Now we can get onto the stocks and get back to the nitty-gritties. Why? Because we haven't had any bad news filtering in to take the market down and hold it down. That's what we've got to keep in mind. I'll be right back. Dow's up 12.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're back, and now what I want to do is I'm going to go run through the list. So Paul says bubble. Will this be mentioned today? I doubt it. All right, now I'm mentioning it here. More reason to back my cause. Still think it's the greatest short of our lifetime. Of your lifetime, I'm not sure. And all right, so it's got the charts. I haven't had a chance to look at the charts, but I've seen a lot of charts, and I've seen the one that says bubble, everything. And I agree with whoever did that chart that says everything. I believe this is a bubble, but it is a bubble, a different kind of a bubble than ones that we've seen before. It is a bubble without, I don't know how to explain it exactly. I was going to say bubble without a cause, but it has a cause. A bubble without, yes, it is a bubble without fans. So I'll explain that over the rest of the week. But first of all, we haven't even got the QQQ at 173 to test the 167 200 period moving average, let alone the 9 period, which is up at the 171 area. So I'm just going to go through the step by step. I don't think this is the greatest short of your lifetime, but it might be a short. I don't disagree with that at all. But I don't think that, I believe that the Qs, Index 100 trading vehicle, the market vectors, what do they call it now? They call it something else. I keep forgetting. Invesco, QQQ Trust Series, I think it's going to go above 187.53, the all-time high, and it's going to do that in 2019. So we'll be on this discussion for a while. Next question I had was, I did Sean. Okay. There was one other that I need to, semiconductors. Yeah, the semiconductors, SMH right now is trading at 104.73. Made a peak D, if there's no new high today, at 106.27 yesterday. The way the MACD is looking, it's beginning to weaken, but it hasn't even crossed negative yet. That's number one. It's really important for the semiconductors to not necessarily lead or not necessarily follow, but independently. I will start to get very concerned about the semiconductors, and I don't know where they will stop on the downside if they go quickly from 104.71 right through 102.50 support, right through 101.50 support, and then start to go towards the 99s. If they get to the 99s, I'll have to do the speed with which they get there is going to tell me whether or not there's going to be a major leg down in the semiconductors, and whether or not all the reports I was reading, as well as being told about the orders that were not coming in, not the orders that were, but the orders that were not coming in going into December. I don't know yet whether that's changed. It should have changed a little bit to the best because the prices have gone through the roof. I mean, 80 to 106. That's 26 points. That's what, 26%, 27%? No, 30, almost 30%. That is a big move. I don't know what will happen for it to crash and break 95s, just 10 points lower. It's still 15 points off the low that was made in December. So I'm just going to say right now, I'm waiting for some kind of a sell-off. But if there's a push into the 108s, hey, that's really good action. I don't know what they say. Reports might mean this is a typical example where the chart is saying, hey, we've already finished our big consolidation from March of 2018 to December, and January, February, we've started something new. Maybe that's the case. I don't know. So that's all I can say. Next question was, I had a question about NVTA. I don't know what NVTA is. NVTA is NVIDIA, not NVIDIA, but NVIDIA Corporation, trading at 19.62. I'm everything about this says this is really a leg B, a brand new leg B after the low that was made at the 9.04 level on the 24th of December. This is very good action. The MACD is very strong. The stochastics just stay. I love flat and steady at 95% is very good. So if you're in, interesting chart. Are you in it? What was the question? I forgot the question. Would you get it? What to do? Let me go back. NVTA. I should be able to find it. I can't find it. I don't know what the question is. Was it just to look at it? No, maybe you can tell me the question again. Oh, where to get back in? Okay. Back in means that you're out, and I'm just going to say to you, there's a gap right here at 17.41 on the 20th was the high, and 16.73 was the high on the 19th. from the chart formation now, unless the market just really turns around and we close the day down 140 points, is possible, because I think we're right in this topping area. If the Dow closes down sharp, and this is still holding tightly up 31, only closes down. It doesn't close down, but it closes like plus 10 after everything that happened today. If it turns out to be a turnaround day, then I'm just going to say to you, I like it here. I'm not encouraging you to get back in at 19.60 if you've got out with a profit, but I am going to say to you, if this is B, there might not be much of a pullback, maybe to the 17.90 area. Maybe, I don't know if it fills the gap before it goes to C. I like it very much. Leg B in the weekly chart, leg B in the monthly chart. Wow, I don't know what they do, but whatever they do, they're doing something right. INVITAE Corporation, trading NVTA is the symbol, trading at 19.59, up 29 cents. I really do like it. I'm just going to say to you, I could see every reason why you would have got out before, because it made that PD doji and was pulling back under the 9-period moving average, and then the 14-period, and the MACD turned down, stochastic, but it didn't go down very much, and then it broke out within 4 days. It was back to where it was. I know what I'm going to do. Because you're a longer-term investor, I'm going to say to you, start a small position now and add to it in the 17. It's at 19.58, and then put in the buy at 18.67, somewhere like that, within 30 cents of that. So 1860 to 1830 level, and that will be to try to get a leg C. Because if this is really a G, that MACD is going to turn around sharply, prices going to turn around sharply. Stochastic within 3 days or 4 days will be under 80%, and it's at 95%. I don't think so. I think this is a really good stock. Nibble and add. Hope that helps you. Next question I had was NVTA, we just did. What was that? Tell. Tell. This is William Tell. Not William Tell. I'm sorry. This is Tellurian Inc. Not sure what they do. Sounds like should be some precious metal, something or other. Anyway, tellurium. There's a triangle, a wedge forming. It should break out either one of the upside or the downside. It's at 9.97 TELL, down 7 cents. I like it. I'm just going to say I think it's stuck in the rectangle formation. I don't think it's going to go to 10.50 just yet. So I'd hold off. Let's see how it holds 9.50 as support. Hope that helps you. I'll be right back. Dow is down 28. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So the TNX, the 10-year is just minus 25 at 26.48. Look at this. A little bumpity bump. A little arch from a big arch formation, little arch formation, small arch, little arch formation. It's getting ready for something. A break into the under 26, 2.6%. The TLT will be really streaming to the upside. A push into the 2720 says, oops, TLT is going to start coming down. But let's look at the TLT, because the TLT, which is basically bonds, the Lehman 20-year T-bond fund, has also been stuck in a range. The way I'm looking at this right now, I'm saying to myself, I think that Powell, and I actually listened to him just for a few minutes. It's a little difficult to find the time there, but I did try to listen to him. And he looks at a set of data. I'm not sure he listens or looks at the news at all. I think he's just data-oriented. So I'm suspecting that at this particular point, there is still enough good data for him to say, you know what, I'm keeping this in mind. I'm not going to rule out the fact that I couldn't go higher in rates, but let's just see what happens. And I think that's what we have to watch, because if the Dow starts to really tank and go under 25, if it starts to pull back and go under 25,800, that's just what, 300 points below from where we are, then we're looking at what happens if the TLT money comes out of the stock market into something like the TLT. So with that in mind, it's in a range, and I'll just give you parameters. Trading the 123s is very positive for bonds. It's not so good for stocks. Going to it's at 121.45. Trading under 120.20, let's call it 120, would be saying, you know what, yields want to go higher, and bonds are going to go lower. That's a very interesting concept. So I just want to mention, I'm not forgetting about all those things, that the Qs, the greatest shorting opportunity. I don't see that at all at this particular point. I think it's done with that December low, at least for a while, at least for a good while. So just wanted to mention that. So the question really is, for those of you who are looking at the TLT, we've gotten to a peak E in the daily. And the question really is that 123.86 level on the 3rd of January. Remember when the market really took off, bonds started to come down. And now we've had this bounce. The question is, are we looking here at this formation, an arch formation? Or are we looking at a very successful sideways consolidation above the low in the 119 area, below the 123.80 high, and we're in the middle, and do we have to wait to see evidence? And the question is, if you are long bonds and you have, say, the TLT, it was mentioned to me, someone has a lot of TLT, then as a safety factor, I would say you can hold on to the TLT for now. Use parameters to get out. Don't just suddenly make an arbitrary decision, because it's right at the point where it could, Let me draw this. This is that Chapman wave inside two fighting patterns. The rectangle pattern says in the weekly chart that peak C that was made at 123.80s and then pulling back to the 119, I should give you the exact price, 119.39 level. That 119.39. Normally what we would see is if there is a rectangle formation with a flagpole, you could have an inside Chapman wave buy mode that takes you to a D, getting close to, right at, or just above the previous high of 123.86. We've already done that, and in fact, we've gone to an E, and then we pull back. My eye is favoring more, just at this particular moment, the arch formation, saying, show me that you can really push sharply above the high of 5 days ago at 122.54. And it's now the weight of evidence is on the TLT. So I'm going to say if you're expecting leg D in the weekly chart, you can still keep that premise. MACD is still good, stochastic still good in the weekly chart, but you have to have price move. If price gets above that high of 122.54, doesn't even have to close there. It just has to go there. It says now there's a much greater chance that it's working its way towards the 123s. That's what you got to keep in mind. I'd be real careful if it starts to close 2 out of 3 sessions in the 119s. Okay. Next question I had was, earnings reports. A long time ago, I stopped saying how to play the earnings report. I found that markets don't necessarily respond to what's told. You can have great earnings, great everything, and then your outlook says, oh, but if it's a little cloudy on Wednesday the 5th at 4 o'clock, we might have, and all of a sudden the market, price drops precipitously. PANW, Palo Alto Networks. Here's this channel. There's no room for error right now. I'm not telling you what it's going to do. What I am going to say is this is what I would watch. You see this channel that's been drawn right here? Let's go from there to there and go down. Then go down there, and let's just do another one. And this is what you got. This particular pattern, it's a pattern I noticed way back, a couple of decades ago. Doesn't happen often, but when it happens, you've got to respect it. It means that nothing, it's immutable. It is not vulnerable to pullbacks. It's only vulnerable to any little eye blink because it wants to go to slightly higher highs and slightly lower lows and slightly higher highs. When it does start to tank, oh, let me look at the chart. What is it? Let me just quickly do this. If Palo Alto at 233 closes under 225 in the next 3 days, that's a real problem. If it holds nicely in the 239s, that's really good action. I don't know which one it was. Planet Fitness, PLNT, was that it? Nope. Planet Fitness has made a high. I'm going to come back to these. I want to find the stock I actually drew, and the pattern is, there it is. Viva Systems in Cloud-Based Business Solutions. I drew this in the other day when it was right here. It was in that doji candle. And I drew in a pattern that said that doji high that was made at 122.73 on the 18th of February. Beautiful up channel, a stock for subscribers I've mentioned before. We've just not got into it. Silly because it went from the 72 level to 122. But that's not the point. The point is I drew in the pattern. I said, when this up channel concludes, it starts a very choppy down move and then a higher high. But that higher high might or might not just break to a new high, but you're starting to set up lower highs and potential lower lows. Once this patterns conclude, it doesn't, or I should say rarely, does it make an inverted V and just plunge to the bottom. Now, here we are. So what happened? It went to the 14-period moving average. It's bounced, not in the same proportion, but just this is a directional move. Now we're going to see, does VEEV, trading at VEEV, 118.07, down $1.71 today, having made an all-time high just 6 sessions ago, a leg D in the monthly chart, leg D in the weekly chart, does it plunge because of bad news and hit the 113s in the next couple of days, or does it pop into the 125s? That's what I'm saying. I don't know. I'm saying the chart pattern is suggesting it's in for a real time of its life for the next week. I'll be right back.
We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my one-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or PRIMAL for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Steve's got a webinar coming up tomorrow night. This will be all about education. Yes, there should be a wonderful workshop. You got Steve coming up straight after me. You got Dave White, then you got Tom O'Brien. I'll be back tomorrow. Of course, check out my opening call. I've had some real nice trades, and hopefully that'll keep going. You never know. Difficult market. So VEEV, VEEV, trading at 118, earnings after the bell at 405. It's got this starting to shake, rattle, and roll. It's set for perfection. Any mistake, it has a little problem. Palo Alto, PANW, 415, the earnings come out. Also, set for perfection. Hasn't made a new all-time high. I think that the all-time high, let's see, 239.50. It's trading at 233.59. This is, if there's good news, it could pop to a new high and then start to do some digesting. It's got a beautiful V-shaped pattern in the weekly chart. It better hold 225 support in the next 2 days. You've got Toll Brothers, TOLL. Toll Brothers comes out at AMC. Oh, out in the morning? To be announced? AMC, I don't know what that means. Anyway, AMC is, oh, did I put in Toll? TOL. Toll Brothers, I don't know when they're, so 36.80 down 51 cents. It's just kind of shaky. It bet old 36 at 36.80. It bet old 36 support. If it starts to trade under that, that's a problem. Leg D in the weekly had a really nice rally from the 28s up to the 38s. Hey, let's see what happens here. If it starts to move in the 39s, that's very good. I think that's going to be tough to do. GW Pharma, GWPH earnings out at 4 o'clock. This is, okay, my suspicion is that the earnings are not quite there, but the outlook will be quite good. So let's just say at 149.30, the all-time high in the 180 area plunges down to 90. That is a whopper of a pullback, 50%, and now it's up 50%. So I think it's ready to digest these gains. I would just say it better hold 139, because if it pulls back, then the pullback can go to the 136s. But if it pops to the 157s, that's good. So I'll be back tomorrow. Have a great day. Check out my opening call. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.